Hey guys, unfortunately we can't be outside and resume our normal outside content because it is literally pouring with rain, typical British weather, but I have been really enjoying the more casual video setup style, so we're going to try and continue that anyway. I recently made a video which you guys seem to really enjoy where I spoke through 16 things that Tesla are either currently working towards, currently working on, or things that they could potentially work on in the future that could add good revenue streams. These included everything from Tesla insurance to Tesla becoming a real estate company and much more. Now, if you haven't watched that video, I will leave it linked on the screen now. Anyway, in today's video, I wanted to talk about some things that are happening currently in the world of Tesla and talk about what they actually mean for the future. And also my thoughts and my feelings on buying Tesla stock right now. And I have a tool to show you later on in the video. So Tesla stock has been actually moving slightly above and slightly below my average price recently. And it can feel somewhat uncomfortable to continue to add to a position that is in the red. When you see a position in the red in your portfolio, you kind of question, do I actually want to buy more? Do I want to buy something that is losing me money, or should I say unrealized losses? But I've kind of trained my mind now, psychologically speaking, where I'm actually seeing this as an opportunity. I actually enjoy seeing my favorite stocks fall. Sounds really weird, but obviously it means I can buy more shares for cheaper, and I love to see that. So I've now got to the point where actually I feel a little bit more uncomfortable when the stock actually goes above my average price, and then I'm a bit like, oh, do I actually want to buy it now? But this is where the psychology of investing really comes into play, and actually having a plan, having a strategy, and having what works for you in place so you know exactly what you're doing when the stock does this or it does this. So it makes me constantly ask the questions of, should I actually be buying more now and risk my average price going up slightly, or should I actually not buy any more and hold off and see what happens? And do let me know what your thoughts on these questions are in the comments below and what your strategy is, because I think every investor at some point asks themselves this and gets very confused. And I'll come back to what I'm doing in just a bit. So the other day we heard that Uber was actually joining forces with Cruise. And Cruise are a subsidiary company of General Motors. And the whole idea of this new partnership is basically to bring autonomous vehicles that can drive themselves to the Uber fleet. You might be wondering why I've just jumped ship and I've started talking about Uber and Cruise, but this is very important and ties directly in with Tesla. You know, this whole idea of autonomous vehicles, this is exactly what Tesla are trying to do. They're trying to build an autonomous fleet of vehicles that will be robotaxis. So what do we know so far? Well, we know that Uber and Cruise have entered a multi-year strategic partnership to bring Cruise's autonomous vehicles to Uber's platform. And this is meant to start next year with a dedicated number of Chevy Bolt-based autonomous vehicles, but we're not sure exactly where this is going to happen. I imagine it will be localized to a particular city that Cruise are already up and running in, but we're going to have to wait and find out exactly where. And this will happen with Tesla too. They won't just roll out globally straight away. When they have their Robotaxi fleet up and running, it will firstly start within selected areas. This is because, you know, different areas have different regulations and you need to get these approvals to actually run and operate a Robotaxi fleet. But I've been thinking a few things about this partnership. One being that Cruise have had their fair share of negative media attention. If we think back to the latter end of last year, around sort of October time, there was a massive thing that happened whereby a Cruise vehicle detected a collision that had happened between a bike and a pedestrian. And this Cruise vehicle attempted to stop and actually pull over to avoid causing any more issues. And in doing so, it actually dragged the pedestrian along with it, causing a lot of issues for this individual. And there was a suspension that took place following this, and also the CEO then resigned. So it was quite a big deal, and this wasn't the only issue they've been having. But thinking outside of just Uber and Cruise, Uber also have a partnership with Waymo. Waymo are of course a company that are also working on autonomous vehicles. Now, thinking from the point of view of Waymo or Cruise, these are quite positive partnerships, right? They get access to Uber's customer base, which is very large, and we'll speak about that in just a minute. And this allows their self-driving vehicles to reach new markets. And also from Uber's point of view, this then means that they can become, down the line, and we'll speak about this in a minute as well, hopefully more profitable, because then they don't have to have a driver in their vehicle. They can save money that way, and they can actually utilize the future technology of transformation, which is of course autonomy. Now, given all the issues that Cruise have been having, I did find this to be a very interesting, maybe questionable partnership on Uber's behalf. But this does highlight something really, really important, and that is that companies are really starting to awaken to this idea that autonomous transportation is here, it is happening, and it is going to be the future. And it shows us that the rest of the industry, whether this is legacy automotive companies or ride-hailing companies like Uber, are actually starting to notice that this shift is happening and they want to be a part of it, because they know if they don't become a part of it now, they will probably just die in the future. But Uber are a very interesting case study for this. Why are they pushing so hard? Why are they so eager to make partnerships? Well, I think it's because right now they are the go-to option and they want to keep it this way. They dominate the ride-hailing market, and especially when you look at the US ride-hailing market, they have complete dominance over the market share. But if they don't pay attention and try to stay ahead of the game here, there is a strong chance that down the line they will lose their lead. And I think they really know this. And why is this? Well, because if we think about this from a customer point of view, so we remove the idea of us as Tesla investors right now, we just think about the average person needing a taxi ride from point A to point B. It's really hard from a customer point of view not to want the Robotaxi option versus the human-driven taxi service. And this is because when we start to think, and we're not there yet, but when we start to think about a future whereby autonomous taxis are here, they are clean, they are efficient, they are customizable in terms of setting the temperature, the music, whatever, before you actually get into the vehicle. There's no driver. For some people, that would be a great thing in terms of socializing. Everything is quick, everything is easy, there are lots available, you never have to wait for a ride, and they are cheap. They are much cheaper. And also the data is there showing you that they are safer. So those two last things are mega important. They are safer and they are cheaper. So why would a customer in the future ever opt for a human-driven taxi option when the autonomous vehicle option is much cheaper, much safer, more efficient, quicker, better, customizable, cleaner, all these things? So I think the reason that Uber are trying to act so quickly on this is because we are fast approaching the Robotaxi event. The 10th of the 10th. Originally it was the 8th of the 8th, now it's the 10th of the 10th, Tesla's Robotaxi event. And I think they are starting to get very concerned about how quickly Tesla's FSD is progressing and what this actually means for a future of Tesla Robotaxi fleets. What is coming on the 10th of the 10th? Because that could really actually affect Uber's future. Now, I actually, as an Uber customer in the past, I've used Uber, and as a Tesla investor even, I don't want Uber to fail. I don't want their business to go completely down the drain, but I do worry about them because they kind of have only two options here. Either they solve FSD on their own, which they can't, like that's not an option, or they are forced to partner, which is what we're seeing happen. And this automatically means less revenue for them in the future. Yes, they will, if this all works out, they'll be saving money in terms of not having drivers, blah, but they're partnering, which means you have to split the profits that you make. But then we have to think about how differently these other companies like Waymo, like Cruise, are actually going about solving autonomy compared to Tesla. And this is where my Tesla investor brain starts coming back in, and I start seeing just how different Tesla are with this. Now, these other companies have taken a completely different approach. Now, in the short term, it's probably an easier approach, the approach that they've taken short term, but long term, Tesla are going to be the clear winners. Now, Tesla are using a heavily vision-based approach, whereby they use advanced neural networking to actually make sense of the visual data that the fleet are bringing in. The others are heavily relying more on LiDAR technology and having a comprehensive suite of sensors on the vehicle. And these differences are really important and really prominent when it comes to cost and when it comes to scalability. The cost per vehicle, when you're not taking Tesla's approach and when you're taking the approach that Cruise, Waymo and other companies are taking, is a lot higher per vehicle. I'm talking a lot higher because they need to be equipped with a range of different cameras and different sensors. I believe the vehicles Waymo are using cost about $200,000, if not more, per vehicle, and Cruise are in the similar ballpark where it's about $150,000 per vehicle to $200,000 per vehicle. And this is dramatically different and a lot more than what Tesla are doing, because they're approaching this problem of solving autonomy with way less hardware. And Tesla's strategy for scalability is much more in the software first approach. And we are already seeing this happen. You know, they are able to carry out updates just by over-the-air software updates, and this will be a really, really big part of the future Robotaxi fleet too. Because theoretically speaking, Tesla can scale their FSD technology to all of their vehicles worldwide without actually having to do much hardware change. So I'm not really sure how Uber and Cruise or Uber and Waymo are going to actually make this work long term, economically speaking. Now, I know that they will save money by not having to pay wages in terms of human drivers, and I know that they will be sharing the costs based, you know, across the two different companies involved in whichever partnership. And I also know that cost reduction with anything does happen over time. But even so, you know, Tesla are coming at this. Tesla is starting this from a real place of strength. I have spoken a number of times about what I think could happen to Tesla and Tesla stock when the Robotaxi platform is actually up and running. But let me just summarize this for you. I think big things could happen. But let's just think shorter term here, because I really want to be balanced and I want to take into account some of the risks that could happen as well. I guess the biggest risk is that the event that we have coming up, the Robotaxi event, if that event doesn't live up to expectations, people are expecting a lot. They're expecting all sorts. Obviously, we are expecting the unveiling of the Robotaxi, or we should call it the cyber cab maybe. But we also know that Musk has said previously that they want to show off a couple of other things. We don't know what these other things are, but of course people have been speculating. Could we be seeing a cyber van? Could we be seeing a bigger vehicle? Could we be hearing about the mass affordable vehicle a little bit more? Is there new technology that we haven't been told about so far? Will it be a two-seater vehicle, the cybercab? How will the doors open? Like, how will the app look? All of these different questions that a lot of people are expecting to have to get answers to. Will the mass affordable vehicle be very similar to the cybercab, but will it just have a steering wheel and pedals? And will it be a 5-seater vehicle? Will it be a 2-seater vehicle? We don't know. If they deliver or exceed expectations in the short term, the stock could go up by quite a lot. Now, we don't know what's going to happen, but it could. But anything less than what is being expected, the stock could go the opposite way. Of course, we cannot predict what the stock is going to do. And we have to understand that this year is different. It's way more unpredictable because we have an upcoming election. And this election is a very big one. However, I do like to use a tool called the Seasonality tool on a platform called Forecaster. And this basically allows me to see recurring patterns that happen throughout a given year. Let me show you this quickly with Tesla. So you can basically select different time periods. So let's select 10 years, 7 years, 5 years, and 3 years. 3 years is showing you the average of the past 3 years. 10 years is showing you the average of the past 10 years, and so on. And what you can actually see here is that over these time periods, there are very clear patterns. Typically, between now and mid-September, Tesla stock goes up, typically, from the historical data. But from now until the end of the year, typically Tesla stock fluctuates, but ends the year a little bit higher than now. However, if you just look at the 3-year data, it shows you that the stock has ended actually a little bit lower. If we now add in the current year, you can see that at times it has been following the same trends, but actually it's been way more divergent and way more volatile. The current year has experienced sharper fluctuations, reflecting increased volatility or market reactions to specific events that we have seen taken place. In my opinion, investors should prepare themselves and should have a strategy in place for increased volatility for the rest of the year. We have the Robotaxi event coming up, which is a big catalyst that has been very anticipated for quite a while now, and that could result in significant gains or significant losses in the short term. Additionally, like I was saying, the election year adds another layer of a lot of uncertainty. And there are other factors that could pop up that we don't even know about yet. And this is why it's so important to control your mind and actually have a plan in place. So even though I can't predict the market, and I'm not trying to, I do like to go on to the seasonality tool on Forecaster and actually see if there is a specific trend over a specific time period that has happened time and time again, especially if I'm seeing my positions falling and I'm trying to figure out why. There are many other things that you can do on Forecaster as well, and if you want to go and try this out for 7 days for absolutely no charge, you can do so using the link in the description below. And if you like what you see, you want to keep using the Forecaster tool, then you can also get 10% off by using my code Hayley10 at checkout, again using the link in the description below. I haven't actually added any Tesla to my portfolio in a couple of weeks now, but I do plan to carry on dollar cost averaging as time goes on. I haven't added it because of other things in my life, not because I haven't wanted more shares. This is a company that, as long as my thesis isn't challenged, my thesis doesn't get changed, that I want to and I plan to hold for many, many years. So ultimately, my primary goal right now is to accumulate as many shares as I possibly can. Now, something that I want to talk about as well, something that I'm really keen on hearing more about, fingers crossed, at the Robotaxi event, is actually the mass affordable compact $25,000 vehicle car. However you want to say it. We don't actually know the exact details of this yet, so we don't really know what to call it, but this mass affordable vehicle. And the reason why is because I really think that having a cheaper vehicle will help Tesla out a lot. Now, I speak a lot about how Tesla is shifting. It's moving away from being a car company. The revenues are going to come in from other places. It's moving towards a SaaS business margin model, all of these things. But equally, I understand that right now, the primary revenue source for Tesla is coming from their EVs. And then when you think of, if you strip everything back from the business and you just have the EVs and you forget that Tesla does anything else, or they ever will, then you have to think, okay, well, how can they grow this existing business? And to me, the way that they do that is by entering new markets. And, you know, pat on the back to Tesla, they've been doing this and they've been planning to do this for a very long time. If you think about how they started with their Roadster and then how they introduced more affordable vehicles, you know, it's all been in their master plan for a while. I keep speaking about this. It's all laid out for us. We know what they're doing. Yeah, sure, there are a few twists and turns here and there, but ultimately we know the path that they want to take and they are on that perfectly. So they enter new markets and they've been doing this. They've done this with Cybertruck. They've done this with Model Y. You know, they keep doing it. Semi-truck, you know, they are entering new markets. But this mass affordable vehicle will change that again. It will bring a brand new demographic to the Tesla scene. The people that want a Tesla that previously weren't able to afford one. It will bring them a wider market. It will bring them the average person. And that's powerful. EV adoption is increasing, even though sometimes we hear that it is not, and Tesla is doing very well within that growing market. During the last Investor Day, we were actually told that the next generation vehicle manufacturing will cost 50% less than it did for the Model Y or the Model 3 platform, and this is due to manufacturing innovations. This means that the margins go up and the vehicle can be sold to customers for cheaper. And on top of this, we have to think about the future. We have to think about how all this feeds in to the Robotaxi fleet. We have to consider the lithium refinery. We have to consider Tesla producing more and more of their own batteries, taking control of the whole thing, becoming even more vertically integrated. How does Optimus come into play? What does Optimus do on the assembly line, and how does this feed into the cost of goods sold for Tesla? All of this is screaming to me that Tesla will be able to lower their cost of goods sold. And then we have the latest update of FSD actually now being rolled out to those on hardware 3. And also, I don't know if you guys have seen this, but apparently Tesla semi-trucks have been spotted in Europe. These are two fantastic updates, especially the latter. I'm very excited about the Tesla semi-truck. Now, I didn't really know that much about the trucking industry, but recently I've been doing a much deeper dive, and I think there is real chance of Tesla doing extremely well and actually gaining more and more market share of that industry as time goes on. If you want to hear a little bit more about that, I did dive in deeper in my most recent Tesla video. Just going back quickly to the Robotaxi actually. Something that we've been speaking about on my Discord recently, and this isn't something that I've actually personally been given too much thought into, and I definitely should have, is this whole idea of how the Robotaxi platform and autonomous driving as a whole will actually really help those isolated members of society. For example, how it could really help the elderly. You know, these people that can't drive anymore. They can't physically, maybe they can't because they're too scared, maybe they can't because it's unsafe for other people, their reaction times aren't as they used to be. You know, how these people will actually be able to regain some of their independence. Also, changing topics again slightly. Sorry, so many things are coming into my head as I'm filming this video. I hope you don't mind. It's a much more casual, rambling type of video than maybe I've done in the past. But I think this is important. Thinking more about energy. Energy is a segment of Tesla's business that has been seeing a lot of rapid growth happening. Between Q2 2023 and Q2 2024, we saw that this area is growing at over 100% revenue growth year over year. And the thing that you have to think about here is that this is a very early business still. There is a lot of room left for this segment to run. The demand for energy storage solutions is likely to continue to grow, especially as we see more and more installments happen of renewable energy sources such as wind or solar. And from the research that I've done, I've not seen much competition for Tesla Energy, especially in terms of megapacks. Now, big businesses need ways to store their renewable energy. Megapacks solve that problem perfectly. Now, the revenue that Tesla pull in from their energy segment is growing. But even so, right now, it's nowhere near as large as what they're getting from their automotive revenue segment. But the point that I want to make is that the margins on energy compared to automotive are so much better. The margins are great, and it's a very profitable business area. They are keeping more of the money per sale than they do per sale of a vehicle. When you look at where Tesla get their revenue from, it is split into a few different groups. So you have the automotive segment, then you have, which is obviously their largest and has been driving the business for a long time. Then you have their services and other segment, and then you have their energy storage and deployment segment. Now, if you add together the revenue from services and other and energy, that now is making up 22% of the entire Tesla total revenue. If we look to a year ago, it was making up 14%. So you can see that a lot of growth is happening and things are really starting to change. So when people say that Tesla's only a car company, and then you say, no, they're not because of this and this, and then someone says, yeah, well, they get all their revenue from EV sales, therefore they are still a car company. It is true, they get the majority of their revenue, but we are seeing that change, and we are seeing that change very quickly. Okay, so now let's just address the elephant in the room quickly. What happened yesterday? The macro situation that is definitely feeding into Tesla's Tesla stock gains that we saw on Friday, and will be a big part of Tesla's short-term future as well. So on Friday, Jerome Powell spoke at the Jackson Hole event, which we spoke about in the video that I filmed a few days ago, whenever that came out. I honestly lose track of time. But anyway, he basically said that he is confident that inflation is on the path back to 2%. He also said that the time has now come to adjust the policy. He is basically signaling, from what I take from this, that we could probably expect rate cuts to begin happening next month in September. And of course, this is big news because people have been speaking about this, anticipating this happening for quite a long time. Every single time he speaks, people are like, oh, no rate cuts again, maybe next time. But actually it seems to be happening now. Interest rate cuts are very bullish for the automotive segment as a whole and very bullish for Tesla as well. Obviously, lower rates mean cheaper financing, which could potentially then mean that there are more demand for Tesla vehicles, and also people are more likely to spend money on high-ticketed items when there's lower inflation, when there's more disposable income. But lower rates also plays into Tesla too, because it means it's cheaper for them to actually finance new projects, new expansions, put more money into R&D, research and development, and all these other things. So this looks very promising. But something else that I just want to quickly mention here, whilst I'm thinking about the bullish things that are happening for Tesla short, mid and long term, but also some of the risks that we could potentially be seeing. A lot of people think that there's this big risk that in terms of autonomous driving, in terms of the Robotaxi fleet, that regulation will really prevent this from happening. And for a long time, I thought this was one of the biggest milestones for Tesla to cross. What if this state or this country says no to a Robotaxi fleet because of particular regulations? And I think this is still a factor. It still definitely needs to, come into your thesis, and you need to think about it. But after listening to what Tasha had to say from ARK Invest on this topic, I'm actually way less concerned than I ever was. If you actually look at the facts, Tesla can show and will be able to show with a lot of data that without a doubt, the Robotaxi autonomous driving, a vehicle using FSD, is way safer than a vehicle not using FSD or even a human-driven Tesla. So with this data backing them up, and with the fact that these vehicles will be a lot cheaper and all this stuff, how can it be prevented? I guess that's my question. It makes sense. It makes sense that actually you would allow this to happen when the only thing that I think would ever stop it is a safety concern. And if you can show that the safety is actually way better, then why wouldn't it happen? I'm sure someone that is smarter than me in the comments below can tell me what other regulations could come into this and actually stop this from happening. But yeah, let me know what you think about everything discussed in this video in the comments below. And remember, if you do want to try Forecaster, use the link in the description below. And if you like it after your free trial, use the code Hayley10 at checkout for 10% off. Thank you so much for watching this video, and I'll see you in the next one.